Hi, my name is Danny Callow. I'm the Chief Executive Officer of Toubani Resources, a TSX-V listed company, soon to be listed on the ASX. We have a great flagship project in southern Mali, the Kobada project, already delineated 3.2 million ounces of resource and around 1.25 million ounces of reserve. We have an up-to-date definitive feasibility study as of late last year, which shows a 100,000 ounce a year mine for 10 years and plenty of exploration upside, which I think we'll get to talking about a little bit later on. I'm very excited to be back here. Thanks, Matthew.
Danny, good to see you again. Been a long time. You've been trying to get a few things over the line, not least of all listing on the ASX. Nearly there?
Nearly there. It's been a long slog. There's a lot of paperwork required, but I think we're 1 or 2 weeks away from hopefully listing, and then we can get out there and grow the investor base.
Right. Okay. As if that's not hard enough, pretty strong headwinds for precious metals the last year. Last time we talked, we were talking about coups in Mali, all sorts of activity in Western Africa more broadly. Gold price, a lot of pressure, downward pressure. I think even hit 1620 last week, and inflationary environment. So with all of that backdrop and a September 2021 DFS, you're slightly changing strategy. Why is that?
Yeah, I think all of the things that you said, Matthew, do take a bit of a hit on being able to go out there and market the company to raise 170, 180 million US. We've had a lot of very good discussions, but I think a lot of pressure from some of the Australian investors to really put the drills back in the ground and see what else we've got. We believe that we have probably still got 50 kilometers of shear zones to drill. We've laid out a very aggressive drill program on the back of this IPO and raise. And I think that we should see some really good news coming out on strike extension especially. So focus first is on extending the strike and showing that this thing is bigger than a 5 kilometer strike. Then we can go back in later and fill that in and grow the resource quite substantially. And I really believe that over the next 12 to 24 months, I think we'll see a sizable increase in resource.
Right. But let's explain this to people, because I think it's important. I want to understand, I guess lots of your current shareholders and anyone looking in might want to explain it. 10 million market cap company, okay, Canadian, Oz, dollar, track each other quite nicely. You've got a DFS from September last year. You've got 3 million ounces, in fact, 1.2 million ounce reserve in there as well in terms of the ore. It's already got the scale that you want, but you're just finding it hard to raise the money or find a kind of alternative financing to allow you to raise the money to actually try and get into production? Because we've seen that model work elsewhere.
Yeah, look, I think if we really tried hard enough, we would find somebody to loan us the money, but at what cost and whether that would be acceptable to the existing shareholders. We do have some really good institutions on board now out of Australia. Their preference has been in the last 6 months to really focus back on the ground. Drilling is a relatively cheap way of adding value to a project because you can bring a lot of ounces in. We're very fortunate that we have a lot of low-hanging fruit there that we can bring in quite easily, and we have this opportunity to grow the strike quite substantially. So I think, Matthew, for me, it's a head down. Really focus on looking at a re-rate here. It's very sad to say, but we're currently sitting at about $4 EV to resource ounce versus our peers in Mali even that are sitting at 20 to 25. So even if you just have a look at a re-rate based upon EV to total resource, we're probably 5 to 6 times without doing anything. What I think we have done though is develop a really great baseline. So we have, as you say, 3 million ounces of resource, 1.25 million reserve. We're fully permitted. We have a DFS in place, so we know that this gold treats very easily through a process plant. And every ounce that we now add to that will significantly add to the value.
Is that your boys drilling in the background?
No, it's a very convenient recycling truck that's just pulled up outside my house. So sorry about that.
Fantastic.
who
Good.
never take any of my bins because I haven't worked out what day they're supposed to be on yet. But anyway.
Okay. Well, I want to dig into it because I don't want people to kind of sort of walk past this and find reasons to discount it. Okay. Look, the DFS, let's. Look, at today's gold prices, it would be sitting at a sort of pre-tax of around 40-45%, after tax IRR of 38%. It's kind of okay, but I don't know what which is fine on price, but the inflationary component. September is a year ago. It's not recent, right? So. Is that what the market is looking at you and saying, well, look, clearly those margins are going to have been squeezed here. And this is really a play on the price of gold when it recovers, which one hopes it does.
Yeah, I think you're right. Like I've said before, I think the DFS is good the day you publish it, and thereafter everything is variable. The one thing we did do in the DFS where we were quite conservative on a number of costs, and we also put quite a big range of sensitivity in. So I think we're still comfortable that if you look at the sensitivities, we're still in the ballpark. But absolutely, I mean, one of the things that I have said to a lot of people is, we are maxed out on the gold reserve that we have and the production that we have. The more ounces that you add, the more flexibility that you add. You can start to play around with throughputs on the plant. You can start to bring in higher grade stuff early. So I think that by adding additional ounces, it's not necessary that we're going to go for more than 100,000 ounces a year, although we might. We're not looking to extend the mine life more than 16 years, but ultimately we have that flexibility to play around with the optimization on the mine plan to get sort of more upfront ounces, more steady ounces over a longer period. And, if you have a look at some of our peers in the market that have been quite successful in that, Tietto is a good example. So they started off similar to us at about a 3 million ton per annum throughput plant. They ramped it up to 4.5 million as they grew their resource ounces, and all of a sudden they've got a very different looking model. So I think that the beauty here is that we have a great baseline. We're pretty de-risked. We know that whatever gold we take out, we can treat through a process plant that's pretty much been designed. We can now play around with throughputs. We can play around with bringing grade forward, provided that we add more ounces, and that's what we're going out to do in the next 12 to 24 months.
Well, you mentioned grade there. Obviously, you're down the Siguri Basin, part of the Birimian Greenstone Belt. It is, there's lots of companies mining there. You sort of know what you're going to get here. What's the chances of actually being able to bump up the grade somewhat? Because it's sitting in and around the sort of 1 gram per ton level. Can you high grade? Can you find better grade? I mean, what are you hoping for?
Look, the beauty of shear zone structures is when you're in the shear zone, the grades can be upwards of 100 grams a ton. When you've got the flexibility on mining those ounces, you can actually stockpile higher grade stuff and blend it through into the plant. As an example, on our northeast boundary, there's Cora Gold, AIM listed. They've come out with a resource of around 1.15 grams a ton, so a little bit higher than us. They believe they'll put about 1.2 to 1.4 grams into a process plant that they're looking at now in their DFS. And that means that certainly as we move to the north, there is an opportunity that we could see some grade improvements. But within that resource, and this is what I want to point out is, within that resource, there are some very high grade pockets. Once we have a few more ounces to play with, we can definitely be more flexible in how we mine this. And often what West African miners do is they mine multiple satellite pits and then eventually join them up into some of the lower grade stuff later. The way we've done it is we've pretty much taken all of our resource, all of our reserve, and mined it in one great big pit, which obviously lowers the grade, but it makes the whole cost element lower. Once we get to more ounces and we can start to be a little bit more selective, we can definitely bring the grade up. I'm pretty convinced of that.
Okay, so and what is it that people are discounting about you, right? You're sitting, on TSX, not on the ASX yet, but 15 cents. It's as low as you've been for a long, long time. But you mentioned some of the peers there. You mentioned Cora Gold, Montage Gold, Pasofino, Nucor. What are they doing that you're not? Because your EV to resource is way behind them. What do you need to do?
So what we need to do is we need to get on the ASX. What we have seen, Matthew, is significant support from those institutions down under from about 18 months ago. They've supported us all through the most recent raises, and they came in very, very big. In fact, what our major shareholder, Cornerstone, the raise this time around. And we've also bringing on board some new institutions that are pretty substantial in Australia. So I think that our institutional shareholder base now post-IPO will look very, very attractive. All of them have been selected and have come in based upon the fact that they see this going bigger and potentially into production at some stage later, and indicated that they would continue to support in the market. So I think that we have a bigger pool of capital to look at here, a better understanding from the investors on West Africa. They're not so knee-jerk reaction to the risks that you sometimes get in these parts of the world, as you mentioned earlier, coups and things like that. And certainly they seem to be very willing to drive this story forward. So I think there's a great opportunity now to get the message out there. We've obviously got to do a lot of marketing. I was in Perth 3 or 4 weeks ago. We had 25 meetings, and overwhelmingly they were very positive about the stock. Clearly, there's not much they can do until we're listed, so that's why we're pushing the listing. But hopefully post that, we should start to see some good volumes, and we should start to see some good support. And I think that providing that we continue to deliver good drill results like we have done over the last 2 or 3 years, then I don't see any reason why we wouldn't start to see that re-rate happen fairly quickly.
Okay, but it's all coming through the drill bet, which is going to cost money. So you've raised, you talk about the support you've got institutionally now. So how much capital are you sitting on? What are you going to do with it? In what time frame?
Well, we should have around 6 or 7 million Australian in the bank post IPO, or net money in the bank. So that's after fees and things. We're putting pretty much all of that into the ground. So that will give us the first 15,000 meters of our drill program covered. That covers a fairly large area of strike that we're going out to try and sort of determine. And if we do that, then obviously later on we'll raise more money to come back and infill drill. But right now it's to show that there's 55 kilometers of shear zones on this property. We've drilled 5. What else is there out there? And I think that's really the next step. So next 6 months or so, I don't think you're going to see a big increase in resource, but what you are going to see is an extension of strike, some good news flow coming out, and really for people to start to understand the quantum of where we can get to in terms of overall resource.
Right, and just explain that, because sometimes I think retail is a little bit guilty of not quite understanding the meaning of the strategy that you're going for. So the going after an extension of strike says, okay, there's a whole bunch more of this stuff over here, but you got to go to what end, right? Are you trying to get the market excited? Are you trying to make this more attractive for someone else, like a partner, to come in and actually, who do have the balance sheet, to start mining this thing? Because like I say, it's already big. How much bigger does it need to get to attract those sorts of people, or how many more headlines do you need to generate to kind of drive that share price up? You've got that balancing act to do, haven't you?
No, we have, and I mean, I'm a mine builder, Matthew. I'm not necessarily a resource geologist, so I guess when I sort of been tearing my hair out over the last 18 months of why on earth can't we get this price up because we have a great project here, the market really was just moving more back towards exploration, certainly in Australia, and that's what we were seeing the support from. I've mentioned it before, the flexibility of more ounces gives you a better sort of financial model, if you like. And most definitely we would be very attractive to somebody as a second or a third project. So, picture the companies that are currently single assets with a little bit of exploration, looking for something to bring in quite quickly, relatively cheap, and hopefully not this cheap. One of the reasons why we've pushed back a little bit on talking to corporates is, how much are we going to give this thing away for? And that's certainly not in the interest of shareholders either. But if we can get it re-rated back to where it should be for this level of project, then we would be an exceptionally good project as a second or a third project for, I could probably think of 5 or 6 off the top of my head that would probably find it still very attractive and very cheap.
Well, definitely. I mean, some of the mid-tiers or majors could kind of pick this up, 3 million ounces for what they'd probably allocate to an exploration budget. It's super, super cheap. Just talk to me technically about what you understand about the ease of recovery, in terms of metallurgy, etc. Is there anything in there that would put anyone off?
That's the amazing thing about this project. So basically what we did was we've done 2 definitive studies in the last 3 years. And the reason for that was we did the oxides first. Oxides are always the easy ones to do because they typically go through a fairly straightforward CIL process. People normally leave the fresh rock or the sulfides behind because they can be a little bit more complicated. So between 2020 and 2021, we took a bulk representative sample across the whole ore body, and we put it through sulfide testing, and we got recoveries through CIL, the same process plant as the oxides, at 94-95%. The only differential being that we just have to mill it a little bit finer. So ultimately what we have here is we have an ore body with oxide, transitional and sulfides, all of which can go through a very straightforward, very typical West African gravity plus CIL plant. And that's the beauty of it. So there's nothing in there that, there's no penalty minerals like the arsenics and things like that. There's no refractory, there's nothing. It's a very simple, straightforward process, which is even made easier because we literally have a geology of oxide sitting on top of transitional, sitting on top of sulfide. So we haven't got this whole mixed up ore body that you sometimes see in these regions. So, if we have to tick all the boxes on what we've got, it's an amazing project. And I think that's really where we would become very attractive to somebody, once they know what we've got.
Right. Okay. Well, given the change of strategy, I guess one in terms of being dual listed, but 2 in terms of moving away from trying to get this thing into production and into exploration. Have you got existing or standing exploration permits or whatever else that you need in country to manage that slight change of focus? Everything's
in place, Matthew. Okay. We renewed both our exploration permits last year. We renewed our environmental permit last year, and our mining permit is valid until 2045. So, we've done a pretty good job, and through, changing governments, as we've seen over the last couple of years, we've done a very good job in maintaining those relationships through the government to make sure that we're current on everything. So we'll probably look to put drill rigs in by end of November, early December.
Right. I mean, the government must be a little bit disappointed because, that would have been jobs, taxes, and all sorts of income for them. But do they understand why?
Yeah. In fact, I think I've said this before on these discussions. I'm exceptionally impressed with the Mali government in the sense that they have done a great job in growing gold production out of Mali over the last 20 years, more so than almost every single African country. They sit 3rd, 4th in terms of African output. And I think they've got a very responsible mining code. It's very balanced between what the country gets and what the investor gets. And, I guess they might be a little bit disappointed, but they still think that Kobada is a great project, and they know that at some stage it's going to get built. And, I'm very encouraged by the fact that over the last 3 to 4 months, you've seen companies like B2 Gold coming out with $50 million exploration programs to expand their resource in Mali. You've seen Barrick coming out and supporting their operations in Mali and saying that they're typically increasing their reserve life further there. And for me, those are the sorts of things that give a lot of encouragement to investors that Mali is here for the long run. And I think it's a great country to operate in.
Brilliant. Well, look, Danny, thanks for the update. Good news about the almost ASX listing. So, what, a couple of weeks, we reckon?
I hope it's a couple of weeks, yeah.
Okay, well, brilliant. Stay in touch. Let us know how you get on, okay?
Brilliant. Thank you very much, Matthew. Cheers.